Hey everyone, welcome back to Investing Talk Podcast. Today, we're looking at a company that's been really making some noise in the market. It's BioXcel Therapeutics.
BioXcel Therapeutics, yeah, and their ticker symbol is BTAI.
BTAI. And you might have seen them in the headlines recently. They had a massive stock price surge.
Yeah, it's pretty interesting, actually. This surge is happening when they're actually facing some financial hurdles.
Okay, so BioXcel is a biotech company,
Right.
and they're focusing on treatments for neurological and psychiatric disorders.
That's right. Some very challenging areas.
Yeah, so we're going to break down what's been going on, why investors are suddenly so excited, and what it all means for you. But first, let's set the scene a little bit. BioXcel stock went from $2.40 to $6.83 in a single day.
Wow.
That's almost a 200% jump.
Yeah, and that kind of volatility is pretty common in the biotech world, especially when you factor in news from the FDA. In BioXcel's case, the FDA just closed its inspection of a phase 3 trial site for their drug BXCL 501.
BXCL 501.
Okay. This is a potential treatment for Alzheimer's-related agitation. They issued a voluntary action indicated status.
Okay, hold on. Voluntary action indicated. That sounds a bit vague. What does that actually mean for the trial and the drug's approval chances?
It's really not as scary as it sounds. Basically, it means the FDA didn't find any major red flags during the inspection, nothing that would warrant immediate regulatory action. However, it could mean they've suggested some minor changes or improvements to the trial protocol.
I see.
Think of it as a to-do list from the FDA.
Okay.
And how BioXcel handles that list will impact their chances of getting BXCL 501 approved.
So it's good news, but not a guaranteed win.
Right.
And investors are clearly betting on that potential win. I mean, that stock price jump is significant. But before we get ahead of ourselves, let's take a step back and look at the company's financials. What's the overall picture there?
Well, BioXcel, like many biotech companies in the early stages, is still operating at a loss. Their Q3 2024 revenue was only $214,000, which is down from the previous year. However, their 9-month revenue is actually up 89% year over year.
So some signs of growth,
Yeah.
but definitely not in the black yet. How long does it typically take for biotech companies to become profitable? And what are some of the specific challenges BioXcel is facing in that regard?
Well, there's no magic formula, and it really depends on the company's specific products, development timelines, and market conditions. But generally, it can take several years, even a decade or more, for a biotech company to become consistently profitable. And that's because they're pouring huge resources into research and development, clinical trials, and regulatory approvals.
That makes sense. So how is BioXcel managing their finances in the meantime? Are they bleeding cash, or do they have enough runway to keep developing these potentially game-changing treatments?
Well, their recent earnings report shows they're actively trying to manage costs and reduce their net loss. They're also exploring various financing options, which could include issuing new shares or taking on debt.
And issuing new shares could lead to dilution for existing shareholders, right? Could you explain what that means and why investors should care?
Absolutely. Dilution happens when a company issues more shares, which essentially divides the ownership pie into smaller slices. For existing shareholders, it means their ownership percentage decreases and their shares could potentially lose value.
So it's a trade-off, potentially sacrificing some ownership in the short term to fund the development of products that could lead to much bigger gains in the long run.
Exactly. And that's one of the key things investors need to consider when evaluating a company like BioXcel. It's a high-risk, high-reward proposition.
Speaking of risk and reward, let's talk about that stock price again. We saw that huge jump on the FDA news, but then the stock pulled back to $3.47. Classic, buy the rumor, sell the news, right?
It does seem that way. It's a very common pattern in the market, especially with volatile stocks like biotechs. Investors get excited about potential good news, drive the price up, and then cash out their profits once the news is confirmed, causing the price to correct.
Okay, so some initial exuberance followed by a dose of reality. And BioXcel's stock structure makes it particularly susceptible to these kinds of swings, doesn't it? I'm talking about their low float. Only 2.58 million shares available for trading.
You're absolutely right. A low float can amplify price movements both upwards and downwards. It means there are fewer shares available to absorb buying or selling pressure. This makes BioXcel a prime target for short squeezes, where a sudden surge in buying forces short sellers to cover their positions, driving the price even higher.
So lots of potential for volatility. And let's not forget they recently regained compliance with Nasdaq listing requirements after a reverse stock split. Can you remind our listeners what a reverse stock split is and why a company might do that?
Sure, a reverse stock split is essentially the opposite of a stock split. Instead of increasing the number of shares outstanding, a company reduces the number of shares by consolidating them. For example, a 1-for-10 reverse split would mean that for every 10 shares you own, you'd receive one new share. The price per share would increase proportionally, but your overall ownership stake in the company would remain the same.
So why would a company choose to do this?
Well, often it's done to boost the stock price and avoid falling below the minimum price requirements for listing on a major exchange like Nasdaq. It can signal that a company is struggling financially and needs to take drastic measures to stay listed.
So in BioXcel's case, it helped them avoid delisting,
Right.
but it also reflects their financial challenges. It's a double-edged sword, for sure. Okay, let's shift gears and look at the technical side of things. What can the charts tell us about BTAI's potential price movement going forward?
As of today, March 4th, 2025, BTAI is trading at $3.47.5. It recently broke above its 20-day simple moving average, which is considered a bullish signal. It's now approaching the 50-day SMA, but it's still significantly below the 200-day SMA, indicating that the long-term trend is still bearish.
So some positive momentum in the short term, but the overall trend is still down.
Right. And the Relative Strength Index, or RSI, which measures the speed and magnitude of price movements, likely spiked during that surge, reaching overbought levels. It has probably moderated since then, but it's something to keep an eye on.
Okay, so the RSI gives us a sense of whether the stock is overbought or oversold. What about support and resistance levels? What are those, and how can they help us understand potential price targets?
Support and resistance levels are essentially price points where the stock has historically struggled to break through. Support levels are where buying interest tends to be strong enough to prevent the price from falling further. Resistance levels are where selling pressure is strong enough to prevent the price from rising further.
So if we identify key support and resistance levels, we can anticipate potential price movements and make more informed trading decisions.
Exactly. In BTAI's case, we're seeing support around $3 to $3.20, and resistance around $4, and then again between $6 and $7.
Interesting. Now let's bring in some outside perspectives. What are analysts saying about BTAI? Do they see it as a buy, a sell, or a hold?
Well, there's a bit of a mixed bag here. Bank of America has an underperform rating on BTAI with a $4 price target. They're citing financial concerns as the main reason for their cautious outlook.
Okay, so they're not exactly bullish. What about other analysts?
Zacks, on the other hand, has a buy rating based on their more optimistic view of BioXcel's earnings potential.
So we've got two contrasting opinions.
Yes.
One focusing on the financials, the other on potential earnings growth. It's a good reminder that analyst ratings are just opinions. And it's important to do your own research and consider all sides of the story.
Absolutely. And it's especially important in a complex and volatile sector like biotech, where there's always a high degree of uncertainty.
Well, we've covered a lot of ground already, but there's much more to discuss. In the next part of our show, we'll dive deeper into BioXcel's product pipeline, their competitive landscape, and the broader trends shaping the biotech industry.
We'll also discuss what this all means for you as an investor and provide some actionable takeaways to help you navigate this exciting and potentially lucrative sector. Stay tuned.
Welcome back to Investing Talk podcast. Before the break, we talked about, some of the challenges and opportunities facing BioXcel Therapeutics.
Yeah, we covered their financials, that eye-popping stock surge and some contrasting analyst opinions. But let's get to the heart of the matter here. What is BioXcel actually developing, and why should investors be excited?
Well, at the core of any biotech company is its product pipeline, and BioXcel has a couple of intriguing candidates. Their lead product, IGLMI, is already approved for treating agitation associated with schizophrenia and bipolar disorder. Okay, so they have a product already generating revenue. But the market for those conditions is pretty crowded, isn't it? What makes IGLMI stand out from the competition?
That's a great question. The key differentiator for IGLMI is its rapid onset of action. It's a sublingual film that dissolves under the tongue, delivering the medication quickly, and this is especially important in acute agitation situations where rapid control of symptoms is really crucial.
So faster relief for patients,
Yeah.
which could be a big selling point for healthcare providers.
Right.
But I understand BioXcel is also aiming to expand agelami's use beyond schizophrenia and bipolar disorder, right?
Precisely. They're currently conducting trials to investigate its effectiveness for agitation in Alzheimer's patients. And this is a significant market opportunity because there's a huge unmet need for safe and effective treatments for agitation in Alzheimer's.
And that brings us back to BXCL 501, the drug that sparked all that recent stock market excitement. What's the latest on that, and how does it differ from agelama?
Well, BXCL 501 is also being developed for Alzheimer's-related agitation, but it works differently than IGMI. It's a potential first-in-class treatment that targets a specific receptor in the brain thought to play a role in agitation.
So a different mechanism of action, potentially targeting a different aspect of agitation, and the FDA inspection we talked about earlier, that was for a phase 3 trial of BXCL 501, correct?
Yes, and the fact that the FDA closed the inspection with a voluntary action indicated status is a positive sign. It suggests the trial is progressing well and the data collected so far is reliable.
But as you mentioned before, there might be some to-do items from the FDA. What kind of things might they be asking BioXcel to address?
It could be anything from minor adjustments to the trial protocol to requests for more data on certain aspects of the study. The FDA might want to see more evidence of the drug's safety or efficacy in specific patient subgroups, for example.
So BioXcel needs to address those points to increase their chances of getting BXCL 501 approved. And if they do get it approved, what does the market opportunity look like? How big is the potential market for a drug like this?
Well, the market for Alzheimer's treatments is enormous and growing rapidly as the population ages. Alzheimer's-related agitation is a common and distressing symptom affecting millions of patients worldwide. Currently, there are limited treatment options available. So a new drug like BXCL 501, if proven safe and effective, could have blockbuster potential.
Blockbuster potential. Those are definitely words that get investors excited. But let's not forget the competition. There are other companies developing treatments for Alzheimer's and related conditions. How does BioXcel stack up against its rivals?
It's a competitive landscape for sure, but BioXcel has a couple of things going for it. First, their focus on agitation specifically is a bit of a niche within the broader Alzheimer's market. Second, their approach with BXCL 501 targeting a specific receptor is novel and potentially more effective than existing treatments that rely on older mechanisms of action.
So differentiation and innovation are key to their competitive strategy.
I think so.
But even with promising products, the road to success in biotech is long and paved with challenges. What are some of the biggest hurdles BioXcel faces on its path to profitability?
Well, as we've already discussed, their current financial situation is a concern. They need to secure additional funding to continue their research and development efforts, and that could lead to dilution for existing shareholders.
Right. And beyond the financials, there's always the inherent risk of clinical trial failures. Drug development is a complex process, and there's no guarantee that any given drug candidate will ultimately prove to be safe and effective.
Exactly. A single failed clinical trial can be a major setback for a biotech company, potentially leading to a significant drop in stock price and investor confidence.
So lots of potential, but also a high degree of risk, it sounds like. Investing in BioXcel is not for the faint of heart.
That's true. It's important for investors to carefully consider their risk tolerance before investing in any biotech company, especially one in the early stages of development like BioXcel.
But for those who are willing to stomach the volatility and embrace the potential for both big wins and big losses, BioXcel's story is certainly compelling. They're tackling a major unmet medical need with innovative approaches, and the recent FDA news suggests they're on the right track.
I agree. They're definitely a company to watch closely.
All right, we've covered a lot of ground on BioXcel, from their product pipeline and competitive landscape to their financials and the inherent risks of biotech investing.
But how can our listeners take all of this information and apply it to their own investment decisions? What are some key takeaways they should keep in mind? We'll dive into that right after the break.
Welcome back to Investing Talk Podcast. We spent this episode dissecting BioXcel Therapeutics, ticker symbol BTAI, a company developing treatments for some pretty complex neurological and psychiatric conditions.
Yeah, we've explored their financials, their progress with the FDA, and even touched on the competitive landscape they face.
All right, so let's bring it all home. What are the key takeaways for our listeners? What should they be thinking about if they're considering investing in BioXcel or any biotech company for that matter?
Well, I think first and foremost, remember that biotech is a long game. It takes time, sometimes many years, for these companies to develop, test, and get approval for their drugs.
So patience is key. This isn't about quick flips or chasing the latest hype.
Exactly. It's about understanding the science, the potential of the treatments, and the company's ability to execute its strategy.
Speaking of strategy, BioXcel is focusing on a specific niche agitation related to conditions like Alzheimer's, schizophrenia, and bipolar disorder. How does that niche focus impact their prospects?
Well, I think it's a smart move. By focusing on a specific area, they can really, become experts and potentially leaders in that market.
Yeah.
It also allows them to target their research and development efforts more effectively.
Okay, so niche focus is a plus, but they still need to navigate a complex regulatory environment and secure funding to keep the lights on.
Absolutely. That's why it's crucial for potential investors to pay close attention to BioXcel's regulatory filings and their financial reports. Look for signs of progress in their clinical trials, but also, keep an eye on their cash burn rate and how they're managing their debt.
So do your homework. Don't just get swept up in the excitement of a potential blockbuster drug look under the hood, and make sure the company has a solid plan and the resources to see it through.
Right. And remember, diversification is your friend. Don't put all your eggs in one basket, especially in a volatile sector like biotech. Spread your risk across multiple companies and even consider diversifying across different sectors.
So if someone's listening and thinking, okay, BioXcel sounds interesting, but I'm not sure I'm ready to dive in, what would you suggest as a next step?
Well, I would say, start by setting up alerts to track BTAI's stock price movements. This will help you get a feel for the company's volatility and identify potential entry or exit points.
Great tip. And while you're at it, set up alerts for some of BioXcel's competitors as well. This will give you a broader perspective on the sector and help you identify trends and opportunities.
Exactly. Knowledge is power, and the more you know about the companies and the market, the better equipped you'll be to make informed investment decisions.
Well said. I think we've covered a lot of ground today and provided our listeners with a solid understanding of BioXcel Therapeutics and the complexities of biotech investing. It's a fascinating sector with incredible potential, but it also comes with its share of risks.
Absolutely. Remember, investing in biotech is a marathon, not a sprint. Do your research, be patient, manage your risk, and never stop learning.
Great advice. And remember to subscribe to Investing Talk podcast for more deep dives into the world of finance and investing.
We'd love to hear your thoughts on BioXcel, so leave a comment below. And if you found this episode helpful, please share it with your friends and fellow investors. Until next time, happy investing.